Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. And I'm just to give you a heads up about what's coming up from me this week. Tomorrow evening, 8 p.m. Sydney time, webinar will be understanding a candlestick chart and identifying candlestick patterns. And then on Thursday, 8 p.m., more analysis live Forex market review on Thursday, the 1st of February. That's what's coming up from me this week. Before we get into it, if you can read through the disclaimer, everybody. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us. I've given you the link there if you want to join us in the webinar itself. For those in the webinar, I've got the chat box open and the Q&A box open, so use either to talk to me. And just having to set up a few things. I had a couple of technical issues when I was coming on, so just bear with me. All right, just give a couple more seconds to read through that. I'm just setting up a few things on the screen. All right, I think I'm good to go, so we'll carry on. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time Forex trader. I'm trading the Forex market now for more than 15 years and mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. And through the week, if you want to connect with us on our website, acy.com, go to the Market News tab. Our YouTube channel, go to ACY Securities Australia. If you want to connect with me on my social media handles, just go over to my Linktree page and you can get my links there. And while you're looking at that, I'm just looking at my chat. Somebody's talking to me. All right, and if you want to get access to my chart layouts and templates for MT4, the ones I'm using in the webinar, just contact Nathan Bray's emails there on the bottom, and I'll put it in the chat for you. So that's just going in the chat. All right. Let's get into news. Patrick, I can see your chat. If I have the time, at the end, I'll get to your pairs. I'm going to go through my normal pairs, and I'll get to your pairs at the end if we have time. All right, so first up, we're going to look at the news. I just want to double check something. I want to make sure that's turned off. All right. So the time shown at this news calendar is my time, Queensland time. So next item of significance is at 1 o'clock in the morning for the US, CB consumer confidence, job openings. In the morning, tomorrow, 10:30, Aussie CPI QQ year on year and trimmed. Of course, the market's expecting the figures to be lower. So that's not, if they come in lower and pretty much on print, that will not be generally positive for the Aussie dollar. If it comes in higher, that will be positive for the Aussie dollar. 11:30 as well, we have China data, manufacturing PMI coming in. That could most definitely affect the Aussie crosses, New Zealand crosses. And then into the evening on Wednesday, US ADP non-farm employment change, Canadian GDP, US employment cost index. Notably, as we get into Thursday, in the morning, we have the interest rate decision, federal fund rate for the US FOMC statement, press conference, 5 o'clock, 5:30. Expecting no interest rate change there. The market's going to be looking at any indication about interest rate cuts at some point, I'm sure. And then later in Thursday, we have the UK interest rate decision at 10 p.m. Okay, so those are the ones to firstly keep your eyes open for, especially tomorrow morning for the Aussie, then the US interest rates early Thursday morning, and then the UK interest rates later into Thursday evening. And that'll be before my Thursday webinar in any event. All right, so make sure you know what's coming out over the weekend. Of course, on Friday we have the job figures for the US in the evening. Okay. All right. Let's get to the charts. Now, at the moment, we go to the weekly chart of the dollar index. We'll start with the dollar index first of all. We may be putting in, I've been saying this in the monthly chart, so I'll go to the monthly chart, maybe putting in an inverse head and shoulder pattern here. Just at the moment, struggling at a weekly resistance level, which is a 103.60. We're pretty much at that level right now. But we're continuing having weeks up. So I'm anticipating that maybe, yes, this is a left shoulder, head, right shoulder, and over time it's going to erode through the areas of resistance. We'll have to wait and see. Day chart at the moment is most definitely holding it up there at 103.60. Of course, we've got the FOMC statement coming out. The market's going to be looking to that and the job figures on Friday. So bit of a holding pattern here at the moment, but overall it's still higher top, higher bottom affair until things show different. So US dollar strength is just about holding up there at the moment. S&P 500 is screaming now above the all-time high, monthly chart, or above. Hasn't had a pullback yet since it broke. Weekly trend is up. We're the fourth week up. So we are due a pullback. And as I've been saying, I don't want to buy at the all-time high of say, any indices. Sure, we can continue up to new heights, but you want to look for a dip. So I will just be drawing a fib across the most immediate day chart range. And, you look for the appropriate 62% or 79% dip. Or back to the all-time high. 62 levels at 47.97, all-time high at 48.16. So that would be an area to watch for clear support. There's also this day chart high here and here in the same area. So, don't have the fear of missing out. That's at the all-time high at the moment. You want to wait for price action to pull back on a dip if you want to be trading the S&P 500 at the moment. All right, clearly in an uptrend, so I don't know if I'd really think about shorting it, but I don't want to be buying it at the top of the move. All right, let's get into euro dollar. Holding its day chart downtrend here. Failed late last year at the 79% level of this range. So if I just move this to a weekly chart, I'm anticipating potentially that. Let me get my other drawing tool up. I'm anticipating that maybe, we've had this move down. This is corrective to the 79% level. Just poke through, but is that a left shoulder? Is that right shoulder? Are we seeing a long-term move this way? That's what I'm anticipating. Of course, we're going to have to break this weekly low swing point here to change the weekly trend to down, but it looks a little bit like that maybe that's happening. Potentially, it's the inverse look of the dollar index at the moment. So if the dollar index continues to move up, forming its inverse head and shoulders, we could see the same thing there, but inversely happening on the euro dollar. So day trend is down. It's not moving very quickly. This is I would anticipate that maybe we're going to move down into this area of day support, 107.56 down to 107.23. Now, if we come into this area, we could break the low, but we'll probably have a bounce. So you just need to be getting ready for the idea that this could offer you a bounce up from this area. We could certainly trade down at that area this week, following the US news, FOMC statement news. Unlikely just to slice straight through there without some reaction. And, we're trading down. We could come into here, bounce back up before wanting to move continually down. Or we could come into this area and hold and totally reverse. But in the short term, you can see the last two trading days, today and Monday, starting to get resistance at this day chart low point, 108. 44 becoming resistance. And we have a 4-hour downtrend here, just testing last week's low at the moment. I'm always looking for levels that I like. I like this area of broken support, 108.44. We're not at that level at the moment. We're a little bit lower. But during the day, today we haven't been able to get up to 108.44. But if we were to come up, that would most certainly be an area to watch. We've got a pivot point just below. All right, yesterday's range. In fact, Friday's high to Monday's low. We could actually get a little bit higher. That would be my first area to watch, but the 62 levels here. And there's a little bit of a gap over here created on Monday. It's open, which didn't quite get filled. So sometimes we fill the gap entirely through the week. So I would be looking at maybe up to at least this area here, 108.44, or coming up to fill this gap, which is 108.52. These areas I would be watching higher up if I wanted to sell this pair with the trend. I don't like to trade at the low of the day, low or the lower of a move. Now, of course, this has almost touched that area, the first area I'm highlighting, so we may have already topped out for the day, but we're already halfway down for the day at the moment. I don't like trading into last week's low either, so I just have to be choosy about where I'd like to trade. So these two areas up there would be areas I would watch. And maybe we can't get back up to 108.44 today, but there's always tomorrow. Always looking for the best levels with the trends to trade down from or up from. Euro yen. Now, I just mapped this out ahead of coming out. I noticed on the 4-hour chart, we were just trading back up inside the last 4-hour candle. This is the range of the last 4-hour candle. And we just had a 79% retracement failure there. And it's already starting to move back down. And it's really failing out weekly what was potential supports becoming resistance. If you go to your weekly chart, this high over here was a bit of support last week. Last week's low was coming in pretty much around the area 159.75. All right, just underneath there was fraction underneath last week. Now we're starting to trade below it. So we're probably coming down to the next area of support. For our chart, you can see the last 3-4-hour candles have all started to hold below that level. So any upward move at the moment, you would need to watch 159.75 to be your resistance level. This current 4-hour candle is starting to hold at last week's low. Just fraction underneath there. So at the moment, we're just holding to the last 4-hour candle range. It's just starting to hold below last week's low, but you've already missed the opportunity to trade in this area. But that is the area where the sellers are at the moment, trading with the trend. Now, whether or not price will come back up into that area and give you the opportunity to trade, you'll first have to monitor it. All right. It is also worth noting that whilst we're holding below 159.75, that on the day chart at the moment, we have had a number of days down. We might need a day up at some point soon. So you just have to ask the question to yourself, how long am I going to keep shorting this before it has maybe a day up? Because the last day up was here, and that's been now 1, 2, 3, 4, 5 days of trading down. One positive inside day, but we haven't had a day up in 5 days. So it's going to have a day up sooner or later. So I'm always aware of how many days we've had down, and they're not getting caught on the bottom. All right. Yes, it can have another 5 days down if it wants to. I'm anticipating long-term that maybe the larger pattern is down, rally to the 79% level, fraction shorts, failed here. I actually shorted that level. I'm looking to try and trade down for the long term. Now, of course, it needs to break through some more support levels, but I'm looking at that as the major pattern at the moment, potentially. All right, so as I was saying, intraday at the moment, if it can come back up, and I'll be watching. That's where the sellers are at the moment. It could come in to retest this area once more today, if it wants to. Euro pound. All right, so going through the time frames, monthly trend is down, lower top, that's the lower bottom, coming into an area of monthly support and weekly support. Closing just below weekly support here, but we've got more support down here. We actually got 3 weekly lows here. So from 85.43 down to 84.92 is weekly support. So yes, it can continue down and through. You just need to be aware, though, that you are in a buying area, potentially. And it might not be easy going to the short side. Here we are over the last 2 trading days, starting to close there below Thursday. Friday, Monday highs all coming in approximately at the 85.43 level. So broken support becoming resistance. That's the sell level at the moment. 4-hour downtrend, you can draw a fib across the range that we're moving back up to. And you can see there the 79% level is very close to that 85.43 level, 85.43 down to 85.47 79% fib. That would be the area to watch to sell if you want to trade this in line with the downtrend. That 85.43 level as well is last month's low. So we moved below last month's low. Moved down, became resistance, moved down, may come back up very close to that area for another lower top forming on the 4-hour there. Okay. All right, pound dollar. Now, I'm bearish. I got short this last week. I did on Tuesday tell you to watch up at the top of the range, and I got short. What day? Friday. I think it was this day. I got short. Azu, hello to you. All right, so it's a bit messy at the moment, a bit range bound. What I am just starting to notice is that maybe whilst it's rather range bound here of this range here, I just go to the weekly chart. Like I was saying, on some other pairs, pattern I'm thinking maybe unfolding here is that's down, rally, down. Okay, that's how I'm looking at it for the long-term positional approach. At the moment on the daily, it's very range bound. I mean, 2 lows here, slightly lower low there. Could say there's a bottom of a range here at the moment, where we saw a false break of this area. And what we're just starting to see a little bit is, well, this is a couple of tops here, but that's a lower top to that top. That's a lower top to that top. This is a high bottom to there as well. So it's a little bit mixed, but above the 62% level, we're starting to put in these top, lower top, another lower top. Just to me, just looks like it's a little bit more on the down tilt. That's a lower bottom just through there a little bit, but then you got a high bottom there. It is mixed, but just because we're starting to yesterday and today, the 62% level of this range, we're holding. And even though we had a positive day yesterday, but there's actually a smaller 62% level on a 4-hour chart, so we'll have a look at that. So I've got a downward bias, as I say, I think it was Wednesday. I got short Wednesday up here, pretty short. I got short at 126.60. Sorry, 127.60 it was. All right. Now I got short in here. Now, it can get a bit messy sometimes on the 4-hour chart, but the big swings that the biggest swings, even though there was a move there, then there was a move up, then there's a move down there. All right, similar kind of lengths. So yesterday we popped back up to the 62% level. So I'd anticipate maybe now. I just want to get a hold of that line. We're maybe starting the next move down from that 62 level. If you at the start of the day, if you had the fib drawn across there, you would have maybe started to realize there's a 62 level there. It's a bit late to trade there, obviously now, but just showing you how I'm coming up with my analysis. So at the moment, playing at 62 level, in fact, 62% levels there. Just managed a day up just, and we're looking like we're maybe going to test yesterday's low. Just intraday today, we're just starting maybe to want to be below 127. Big drop, rally back to. So any time through the next 12 hours, I would be watching. So 127 would be a nice area to watch for your setup to trade down from. Overall, though, this could still hold to its range. We got the UK interest rate decision. Down here is support down at 126.11. So if that doesn't break, could be a trade up from there. I think Lawrence last week you were telling me you got longed from down there, I think. So 126.11 could still hold as a range. We could be in a long-term range here for quite a while. Some of the data coming out from the UK has been a fraction inflationary, which is positive for the pair to move up potentially. But then if US data comes out and that's positive, then there's kind of two economies there fighting against each other to have maybe maintaining their interest rates at high levels. So this could stay range bound for quite a while, but it just, potentially maybe it is heading certainly down to 126.11. We'll have to wait and see. All right, so if you're not in and you're looking maybe to trade in line with the most intraday trend at the moment, I'll be watching up here at 127. Pound yen, forming a potential double top up here. Gradually grinding down, putting in the lower top. If you've been with me over the last 2 weeks, I've been talking about this area up here being resistance. There was a 79% retracement in here. So it's just coming down into weekly support from over here at the moment. So it's not an area to sell into. If you're short, great. You just got your fingers crossed, hoping this is going to break. All right, so the 79% level that I was discussing was up here. Now we're coming into support in the 127 extension. So if I'm not short this pair. So what I would be looking for is, yes, this can trade underneath this level of support, but logically, because we're at the 127 extension, then I would be logically looking for this to then rally 62.79% area and look then for the next lower top to form. I'm not going to try and sell it at the bottom into support. All right, so you have to be patient for the next rally. Well, I do. You can do what you want, but for me, the framework that I'm using, I know there's a downtrend there, but I'm not going to sell it at the bottom. I need to wait for the next rally. Of course, if this just breaks straight down through 186.75, I may, if I was looking to short this pair, I may then have to look for, okay, this gets a very great break. Then you're looking for 165.75 to be resistance to trade down from. And that is, close to the 79% area of the bigger range. And if we could have a major double top here. So getting short no lower than the 79% level would maximize your risk reward if you were holding for a long-term positional play if the double top, because the double top price projection is down here at 168.03. So if we are dealing with a major double top, and we could just stay in a major range from highs to lows, but if we can, break down, double top price projection down at 168. So getting short and holding a position at the moment, if it can start to break down, that will give you excellent risk to reward. So the day chart trend is down from that double top forming, or potentially forming. It's never a true double top till we break the midpoint, but you can anticipate that maybe it's forming, getting in the early phase of the move down for the long-term target, okay? All right, so at the moment, I'll be looking for a rally, or if we break weekly support, which we're trading underneath right this second, look to 186.75 to be resistance later in the week. What's that pound doing? Pound is snorting down at the moment. Let's back to euros, do not too much. All right, let's get into the Aussie yen. Now, I've been saying I'm short at 97.55 at the moment. Been short for a couple of weeks. Countless times I've been discussing this potential failure up here at this weekly high over here, 97.66. I traded at pretty much the 79% retracement of this range. I'm looking at this as a pattern to be unfolding, like I was showing on the Euro yen. We moved, rallied. I'm looking at this pattern. Today, whilst the day chart is kind of higher bottom, higher top, it's potentially forming a lower top here. At that major 79% level of this range, and we drop to the 4-hour chart, there is this range. I had this drawn in, I think, on Thursday, talking about these two 79% levels, 97.54 to 97.66. I'm pretty sure if you go and watch the recording, I said that area on Thursday last week. All right. Aussie yen loves the 79% levels. All right. If all you did on the Aussie yen was draw the fib in and work out where the trend is, where the 79% levels, and just wait for the 79% retracements, I don't think you wouldn't be unprofitable for, if you did, if that's all you did for the year, you would be profitable by the end of the year. All right, so it's too late to trade up here. We've got the CPI data coming out tomorrow of the Aussie, so we could still revisit this level up here for another failure, but if we are going to break down to the downside, there's only so many times it can hold at this area before it's going to have to let go to the downside. So, but you could be watching back up here tomorrow at anywhere from 97.55 up to 97.66 for a volatile spike, depending on what the news comes out. Other than that, at the moment, you don't want to be buying at the bottom of the day, so you're going to have to conjure up something. A bit difficult at the moment. I would have to see some form of a rally, because I wouldn't be selling at the bottom of the day. So I'll go back to the 4-hour chart. 1-hour chart. So there is a fib tool here where we've come up to just short of the 79% level of that drop down. And, we're getting towards the 127 extension. So I would have to look at the moment, this being the next minor intraday area to watch for a rally. I would have to keep dragging the fib down and look for a rally. I'm not going to sell it at the bottom of a move. All right, so some of my commentary today might be, we're at the bottom of moves here. You have to wait for the rally. And last Thursday, I most definitely said, I'm pretty sure last Thursday said, watch up here. All right, you have to wait till Monday. Didn't quite get there Friday. it got there Monday, so you have to wait 2 days. So while I'm doing my commentary now, you might have to wait another 24 hours for this to come back up to range. So with the trend that's starting to unfold to the downside. All right, Aussie dollar. It's a bit horrible at the moment. It's clearly waiting for the CPI data to come out for the Aussie in the morning. It's just, it's able to trade above just 66, about 66.20 maybe. We may have been a fraction above 20 today, 66.23. See all these wicks though through here for the last week. I've been watching up here at 66.47. Not quite got there yet. Of the range, this range here, 62 levels at 66.58. I'm anticipating we're going like this. All right. Long term. Short term, we're having a week up, very range bound over the last 2 weeks. And the area I'm watching, I said this last weekend, sometimes for me it pays just, again, patience, waiting for it to come to a level, and I'm watching. 66.47 is broken support. 62% level of that range I was just discussing is at 66.58. Tomorrow's CPI data could create some volatility to get up into that area. And then I'll watch to see what happens. Ahead of then, we could break down from 66, but in all probability, we're probably going to be rather range bound. But over the next 24 to 48 hours, you may well see 66 being clear resistance on any rallies back to, depending on what the reaction of this pair is to the Aussie CPI tomorrow. But in a perfect world, I would love to see this come up just a little bit higher to 66.47 to 66.58 and see what it wants to do there. Now, the CPI data comes out massively high tomorrow. We could come up to the 68 level, which seems miles away at the moment, but that's only 200 pips. If the CPI data comes out very positive tomorrow, we could certainly see 68 over the next 24, 36, 48 hours. And that would put us into this range, put us very much into a 79% retracement area up here at 67.96. All right, so that would most definitely be my perfectly preferred option, but probably not. But it's worth understanding where that area is in case the news gets price driven up there. All right. All right, let's get into the New Zealand yen. That's what I highlighted on Thursday. Where did we trade today? At those two 4-hour highs at the 79% area. That's last week's range from high to low. We often will trace back inside the range of the last week to the 62 to 79% level. So it's just done it. So I'd anticipate now that for this week, that's last week's move down. Then we rallied back up. We kind of rallied up to there. That was the highest point. We came back to the 79% level there. And that could be the high of the week. And the low of the week could come down in here. So look for little rallies. Is that the high of the week coming in there? On a 15-minute chart. It's just moved down to there at a level of 79% retracement. You could look to see if it will do the next little 79% retracement. That's at 90.49. If we continue to trade down without, really respecting this kind of price action at the moment, we've obviously moved down, rallied, dropped. Do we now rally? This sort of affair. If we just continue down, don't do that, then at some point, keep dragging this down. At some point, you might get a 62 level overlapping with the resistance level at 90.42 to be your level to trade down from. All right, so you want to try to look for some form of rally. That's the most immediate little move down that we're experiencing. Does it retrace back inside that range for another lower top to form intraday? New Zealand dollar, playing at last week's high. Not able to get up to the area I'm watching. One of the weakest currencies at the moment, the New Zealand dollar. So, like the Aussie at the moment, it's very choppy through here. It's just getting support on support. Again, I'm not wanting to be bearish on all these pairs, but it's just the structure of the swings. You know, I would until proven, until the a high is broken within these larger swings that I'm mapping out for you today. I'm just mapping out the large swings. So that's what I'm anticipating. If we, clear this area through here, then I've changed my mind. But at the moment, the market's not offering that. It's come back up to the top of the range, close to, failed. So it is, though, just holding on support here at the moment, rather sideways. 62 level of the range from high to low is up there at 61.75. So this could pop up. That would be an area we would watch. 61.75, 61.80. If it can get up there, what does it do? That would be I would anticipate the sellers would be in that area. There's a bit of a imbalance in here too. That would get filled if price got into that area. So that's where we'll be watching at the moment. Patiently watching. Can it come in to this area up here? Don't know if it can. But some of this price action at the moment is very, it's not very friendly. It's not very nice, just sideways. So got to pick the pairs that look nicer, or be patient, work out where you'd like to trade, and just wait and see if price can get to the area that you'd really like to trade at if you can get there at the moment, until you see better price action. All right, dollar Canadian. It's not able to fill this imbalance here on the day chart, and it is actually moving to a downtrend at the moment. Now that could just be a 1 or 2 week pullback here on the weekly chart back to support. So any negativity that we're seeing at the moment on the dollar CAD, if it's going to continue, it has to move below 133.79 to make it worth anything. If all it does is trade back to 133.79, which is this area here, if that's all it does, then this would be the area to look for the opportunity to trade back up. Maybe we're just having 1 week down just before rekindling the overall move back up the range. So I would just be monitoring to see if this can come down to 133.79 and can it hold. All right, dollar franc. This is what I was looking at on Thursday. Never quite got up to resistance, but just fell just a bit short. It's getting support at last week's low here at the moment. So if you like the dollar franc long, getting long right now, that's only 24 pips away from last week's low. So you could be getting long now, stop just below last week's low. Maybe we can't break last week's low. So on the weekly chart, so we'll go to the monthly chart because we've got 2 levels. We're false breaking monthly support here, and we're holding at monthly resistance here. So which area is going to win out? I mean, the weekly trend is still down. Monthly trend is down too. The day trend is just holding a higher bottom here. So I was actually looking last week at this range, 62% retracement, moving down to monthly support, but it never came. And if we can't break last week's low, we're probably going to come back up and retest 86.99. So it's not a bad risk reward. You see, we try to move back down to last week's low already today and couldn't. So it's looking like last week's low is wanting to be support. Last week's low was at 86.06. So you could actually be monitoring this level upward move at the moment. Does it offer you some form of pullback? You can see all the support here. Could get as deep as that area there. So, A613, 79% level, could get down to A609. That would be a great area to look for price to once more come down into support, hold to move up. So keep dragging the fib up if price keeps moving up, but do you want to be buying? If you are moving up from support, you don't want to be buying at the top of the intraday move. You want to look for a pullback. All right, dollar yen. This is how I mapped it out last week. Failed up at the 79% level. So the day chart, like the pound yen I was just showing before, is putting in a lower top. Putting a lower top here, so it's got two minor lower tops at the moment, 1 and 2. We don't really have a lower bottom yet. So it would be nice to see a lower bottom come in. That will start, if this puts in a lower bottom, the whole market's going to see that dollar yen's putting in lower tops and a lower bottom. That's going to be obviously positive for the yen, negative for the US dollar yen. And that will, start to unfold, I'm sure, into the pound yen, the euro yen, the Aussie yen moving down. So seeing a break of that area here, this area here at 146.65 would be great. Just looking at the swings at the moment. So for our chart here, this could actually come back up. We've moved to a lower bottom here. So if it was to rally back up, you're looking at the 79% level, 148.07 down to 148. That would be a good area to watch. Proved it there intraday. Once it broke below 148, wanted to be resistance here. So that's clearly where the sellers dropped below through here, became resistance. So that would be a good area to watch if it can come back up. We just have to monitor to see if it can. Gold. That was my area I put in on Thursday. Spiked down into my area I was discussing on Thursday. So weekly support is holding. Now we're potentially moving back up to weekly, monthly resistance. This is a weekly chart, 1, 2, 3 highs. These are monthly highs as well. So this is actually a weekly area resistance, a monthly area resistance up here. We're getting some support from weekly support here. So it's rather range bound at the moment. We have a lower top, higher bottom. Range bound. So it looks like we're holding it 2009, heading back towards 2070, 79. All right, into these 4-hour highs here. So, again, a lot of my commentary is not buying near the low of the day. We want to be buying at the high of gold at the moment, into these areas. It'd be nice if that could break above those highs. And if you want to get into this instrument, we could break above, then look for the next pullback to the 62.79% area by a dip. And I would anticipate we're moving up to this area. 2070 to 2079, we can definitely get there this week with the FOMC statement coming out. So if you're more short than long on gold at the moment in terms of long-term positional play, watch up there this week. We could definitely hit 2070 to 2079, hold and move down. All right, so that's an area to watch for shorting. Down here would be most definitely an area to look for, buying and longing. I don't really like where price is, to be brutally honest, because obviously that's the top of the range, that's the bottom of the range, and this is in the middle. So to be brutally honest, whilst you could be looking for a pullback on a small 4-hour fib retracement, you're in the middle of the range there. It's not the most ideal area when trading a range. You want to be buying at the base support or selling at resistance. Okay, but you can monitor that, see how price unfolds. All right, Patrick, you got some questions about pound Aussie, pound New Zealand. Pound Aussie, as it signaled a change on the daily. Not really. I've got the right pair up, it would be helpful. I'm just thinking it doesn't look like the pound Aussie. All right, we've got the pound Aussie now. I would say it is starting to signal a downtrend, but it's at the bottom of the most immediate move because what I can see is that was a downward move. Then we've rallied. That's the next downward move. So we're getting close to the bottom of this next downward move unless it releases. So at the moment, yes, it looks like it's holding at this area here. Minor downtrend starting to form. But, you know, that's the last daily high. And I'd look for this potentially now, you know, come back up for another test. Put in another lower top somewhere. All right, so that's my thoughts on the pound Aussie. Looks like it's holding at that level, but it's potentially at the bottom of the move at the moment in terms of the swings. It probably needs to bounce back up now. And pound New Zealand. So pound New Zealand has obviously failed. Right, so there's maybe a double top forming here. Day chart has put in a lower top. Again, I would say the same. It's exactly the same as a pound Aussie in its formation. You've had to move down to that point, rallied, moved down. You're really looking for the next lower top to form. Looking for a rally, next lower top to form. All right, they're both very similar. All right, possibly like you were saying, fire head and shoulder could form here. Shoulder, head, right shoulder there. Yep. Just looking at all your questions coming in. So yeah, the 4-hour chart on the pound New Zealand could be forming a head and shoulder, maybe. I mean, there's a couple of patterns there. I mean, that could be a left shoulder, head, right shoulder there. Then that could be a left shoulder. That could be a head, and you get one forming there. And I would look for this to come up like so. All right, that's my thoughts on those pound crosses there. Azu, you're asking me my target on the euro dollar. At the moment, probably support, weekly support. I was saying earlier, down here at 107.56, down a weekly support at 107.23. This is maybe moving down to there at the moment. Long term, I actually said long term that I think this kind of pattern's mapping out, but this will take more than a month to occur. And we've got weekly support here at 107.23. So the most immediate target would be, for price to test 107.23, maybe 107.100. It'll probably bounce there. And then, do we get a continuation down and through that area? And we can definitely trade down at 107.23 this week with the FOMC statement coming out and the US job figures. We'll just have to wait and see what the data brings. So that's my downward target. My most immediate target would be down here at 107.56 to 107.23. Starting to, as I was saying earlier, starting to want to hold maybe below this little area of support now. It was at 108.44. All right. But it's all data dependent now from the FOMC statement on the early Thursday morning, job figures Friday. We'll have to wait and see what happens. It's clearly if the data isn't US dollar positive, then this will probably come all the way back up. All right. All right, everybody, that's my thoughts on the market at the moment, the levels I'm watching. What's that euro yen doing? All right, still underneath that 79% level. All right, so just be aware of the news that happens coming out. Of course, tomorrow for the Aussie crosses, that's the next real one to watch, I think. CPI data, inflation data for the Aussie tomorrow. Highly volatile for Aussie crosses there. Thursday morning, US interest rate decision. Thursday evening, UK interest rate decision, and then Friday job figures. All right, that's my thoughts on the market at the moment. Tomorrow, my education webinar is understanding candlestick charts, identifying candlestick patterns, so basics of charting really, and then more analysis on Thursday. I'm away next week, so if you want to catch me this week, this week's the week to catch me because I'll be away next week and then back the week after. All right, everybody. Thanks very much. Thanks, Patrick. Thanks, Hazu. Have a great trading day, and I look forward to